Joining me now with more is Vance Howard, CEO and Portfolio Manager at Howard Capital Management. Vance, it's great to have you on the show. And are you in a celebratory mood as we look to round out 2024?
Well, 2024 has been a really nice year. We've been quite pleased with it. 2023 was quite good. 2022, not so much, but if you average the three together, I think you got, an 8.5%, 9% rate of return, which is positive. Last couple of days have been a little bit of a sell-off, which, we would love to have seen those days up, but it is the way it goes. So, but net, this year is going to be a great year for investors. And I think that next year need to be a very nice year also. So I think investors need to stay the course.
What is driving that optimism that you have, Vance?
Well, you've got a lot of different factors that are setting up. You've got a strong labor market. You've got inflation that's dropping at a reasonable pace, so that's encouraging also. The Fed's dropping rates, even though organically the 10-year Treasury's been going up, which is a little bit disturbing. I think that's what's putting a little bit of pressure on this year and rally. But there's a lot to be excited about. If Trump decreases regulation, I think that's going to increase profits. I just think there's a lot to be excited about. The cash on the sidelines, if you go and look at money market rate, the amount of money markets that are sitting on the sidelines, 6.7 trillion. It's just amazing the amount of cash that come into this market in 2025, especially if rates, would actually drop down and the Fed continues to drop rates. So I think there's a lot of optimism to be had.
What should viewers take away from the recent pullback that we've seen, Vance? Some have said that it's profit-taking. Still, the S&P, I think, only dipped about 3% from its record high, so really nowhere near a correction.
Yeah, nowhere near a correction. But, the stocks that we all own, which are the high flyers, Magnificent Seven, they've taken it a little bit harder than the 3% correction on the S&P or maybe even the NASDAQ as a whole. So they pulled back a little bit. They've worked off a little bit of what we call a trough in the market. Even though that we're oversold now, it hasn't been much of a rally coming off this oversold condition over the past 2 or 3 days, which is a little bit concerning. But I think when you look at the 10-year Treasury, I think that's what's putting a little bit of pressure on the markets here at year end, and we don't know if that'll carry over to 2025 or not, but we'll be anxiously waiting and seeing. But I think that's having an effect. I also think there's a little bit of profit taking. You've had 2 really good years in the market. I think people are adjusting their portfolios, maybe taking some capital gains this year to push them into 2025. There's really no, direct answer to why the market's pulled back the past 2 or 3 days, but the trend's still up. As long as the trend's still up, you need to buy on every pullback.
Interesting. And Vance Howard, I should note here, one of the major themes that we saw play out in 2024, of course, was artificial intelligence momentum, fueling a lot of the gains, especially in the first half. Do you expect that to continue to be a winning sector in 2025?
Well, I think that you have to. I think that's really where the market's headed. I think AI is incredibly important. I think that it's not as impactful at this given moment in time as what it will be 2, 3, 4, 5 years from now. One of my favorite picks for the year is Salesforce CRM, and I think it's going to benefit a lot from AI. I think they'll be able to directly, increase their output and reduce their overhead by using AI, and I think that's a great stock for 2025. And again, I love stocks that have recurring revenue. Salesforce has a great recurring revenue base, so I think that's a strong pick that AI is going to play a major factor in.
Yeah. Salesforce, certainly an NYSE listed company, as is Ralph Lauren. Vance, I see Ralph Lauren is on your radar as well. Are you expecting gains for next year?
I do. I think Ralph Lauren is just a great company. They're so well managed and they're growing. The retail outlet stores are incredibly interesting to go to, and they've got a nice little coffee shop in there. Their clothing is probably one of the top, retail outlets anywhere in the world right now, and I think they're only going to get more and more interesting to people. And I think their clothing's going to do quite well. Again, very profitable, very well managed, and they're pretty innovative in what they're coming out with as far as design, as far as what investors or what retail buyers would like to see.
So stocks can continue to rise even if we see fewer rate cuts. What do you think?
I think so. I think as long as the trajectory of rates are down, which it clearly is, I think that's a good thing and a positive thing for the market. And we don't have to have a whole bunch of rate cuts immediately. They can be spread out over the course of 2025 and still have the impact that we would like to have, which is the Fed is on our side. And I think that's really critical. Again, goes back to the trend. Don't fight the trend. Don't fight the Fed. The trend's clearly up. The HCM buy line's positive. Pullbacks are viable, and I think you stay the course.
Vance Howard, CEO and Portfolio Manager at Howard Capital Management. Vance, thank you and Happy New Year.
Happy New Year to you.